Look, so that is the question. You can argue that the yield curve has inverted and it doesn't actually reflect anything about U.S. or global growth. So you can say the short end has gone up because the U.S. is issuing tons of T-bills to finance the spending bill. And you can also argue that the long end's been held down partly by low rates elsewhere, but also partly because deflation is a tail risk in the world we're living in. And so long-term bonds are a really great equity risk hedge. And so that could be why the yield curve's inverted. I think it's a nice academic debate. I'm sympathetic to that argument, but I think if every investor thinks that a yield curve inversion results in a recession, they'll behave accordingly, and it'll end up becoming a self-fulfilling prophecy. So I do think a yield curve inversion will probably lead to a recession. Now, the yield curve inverted for like a nanosecond on Friday. I do think it needs to be more sustained to be more of a signal.
Okay, so let's clarify that again. So if we get another inversion, like you said, we had one for a blip, but let's say we get another inversion. Does that signal imminent recession this year, or is this going to be a slow burn out a number of quarters?
Yeah, so you're asking the right question. A yield curve inversion is a great signal that a recession is coming. It tells you pretty much nothing about when the recession is coming. And so I think to figure out the timing, we all need to look to China. If you believe that the stimulus in China is going to feed through into the economy, and there are already some indicators that it's doing so, then that should really buoy Europe and Japan and should help out global growth as well. If you don't think that the Chinese stimulus will work, I think the recession could come much sooner.
Will it work?
I think it will. I think Chinese officials are going to do whatever it takes, sort of Mario Draghi style, to reflate the economy. We've already seen about $500 billion in fiscal stimulus measures, and they're not done yet. That's roughly the same amount that we saw in 2009 when China bailed out the entire world. So I think it's very unlikely that China's stimulus won't work. I think China will be reaccelerating and probably booming by the end of the year.
You know, ironically, is the biggest risk out there, Megan, maybe not the yield curve, but everybody that is watching CNBC around the world right now, because they hear that 7 out of 7 of the last recessions were preceded by that inverted yield curve. If we start behaving as if a recession is coming, isn't there a risk of sort of a global self-fulfilling economic prophecy?
That's right. If the markets decide that they are intent on making a recession happen, they can absolutely do that. We saw that last December with the significant equity market correction. So I do think that's true. Fundamentally, though, we are seeing a slowdown in global growth everywhere but China, where we're seeing a reacceleration, or will be by the end of the year. But everybody's slowing down from way above potential growth. So there's a lot of room to slow down before you get to a recession as well. An inverted yield curve is also difficult for the banks, right? They can't benefit from a carry trade anymore. And so that could constrain lending, and that could feed through into weaker growth as well. So an inverted yield curve is both a signal, but also maybe a cause of a recession.
Yeah, quickly. Okay, on a different note, Donald Trump's likely latest Fed pick is Stephen Moore, well known to viewers here on CNBC. He's been a guest many times on this network. He is calling for a rate cut, and soon. Is that the right move? Is he the right man?
So I would disagree with that move. I don't think that the economic data suggests that we need a rate cut. If you look at real rates, actually, we're still well in accommodative territory. I mean, real rates are about 0.5%. That is accommodative. So I think a cut would be a mistake at this point. Is he the right man for the job? I think there are real questions about how qualified he is, his understanding of the Fed's balance sheet in particular. But I do think that he has been a cheerleader for Trump. And I think this is mostly interesting because Trump has so far pretty much left the Fed alone in terms of personnel. But it seems like this is the first indication that he's trying to get his men in there.